Yes, I'm going to explain a bit more and interpreting all financial data, which giving a clear signal that it is a multi-vigor, or say Morepen laboratory is a multi-vigor. Needless to say that it is multi-vigor because financial data they are indicating it is a multi-vigors. Let us see the sales figure. The consolidated sales figure in the year 2014 it was 366.85 crores. In 2015 it rose to 408.24 crores, and 2016 it rose to 494.14 crores, and 2017 it rose to very close to 600 crores, that is 595.47 crores. And in 2018 consolidated sales crossed 600 and it was 606 crore 51 lakhs. Now let us go into the net profit figure. If we compare or if we see or analyze more, the company was suffering losses from 2003 and up to 2014. 2014 the company had a problem or had defaulted the FD repayment and FD interest repayment, and all the pledge share with HDFC Bank was sold out by the banker, and the net realization was settled partially for the debt. Remaining debt had to be paid by the company by issue of shares and to others also, other banker and other FD holder. All were settled in 2009 by issue of shares. Now in 2003 net loss was 324 crores, 2005 71.54 crores, 2006 34.51 crores, in 2007 132.79 crores, 2008 48.54 crores, in 2009 36.39 crores, 31 crores, 2010 1.40 crores, 2011 43.73 crores, 2012 24.16 crores, and 2013 net loss was 22.67 crores, and 2014 it was 6.16 crore. 2015 turned into loss to profit making company. Profit was very close to 1 crores, or say 72 plus lakhs profit. The company had continuously increasing in profit. 2016 15.64 crores, 2017 that is 16-17 23.17 crore, 2017-18 26.13 crores, and obviously last 2 quarters company had made a turnover, consolidated turnover jump, and consolidated turnover already very close to 400 crores. Now we can expect with the dispatch of Montelucas Abertustin and continuous increase in the sales figure in the different items or say sectional sales figure and OTP and the medical equipment, etc. We can expect for quarter 3 and 4 company going to achieve very close to 500 crores. So total consolidated turnover may be seen a jump near to the 50%, and there is also possibility of higher profits. The profit for last 2 quarters was not satisfactory because of settlement, because of interest payment. Now let us see the other figure. Now people are thinking the FD, preference shares, all this travel into the company. But listen carefully, the share capital or the total share capital, which was 209 crores in the balance sheet as on 31st 3 2016, 209.61 crores, which is very close to 210 crores, was reduced into 89.96 crore, and in 2018, that is 31st 3 2018, 31st 3 2017 onward, that is it is reduced into 89.96 crore, and it is comprising only the equity share capital and fully paid up of nominal value rupees 2 each. Now total share capital in balance sheet, that is as on 31st 3 2016, was 219.61 crores, which comprises 89.96 equity paid up capital and preference share capital 119.65 crores. Now preference shares capital was redeemed during the accounting period 2016-17. Now the reserve, if we follow, so preference shares were redeemed already very close. We are going to cross. We have already crossed say 18 months, and we are going to cross 19-20 months around, or by December we'll see the repayment of preference shares had been already crossed 20 months, and on 31st March next year it will cross the 2 years. Now how we understand the preference shares, how they have utilized. Now all those years PBSL losses was set up against the profit which were accumulated. Now for the purpose of taxation, we can say taxable profit achieved in this year only, that is 2018-19, because tax profit and the accounting profit are different. So once the company is paying the tax profit, having tax profit, that means all accumulated losses for the purpose of income tax have been settled out, or there is no accumulated losses. Now the reserve, if you follow the reserve for 31st March 2016 was 119.24 crores, and that is why it was not possible for the company to make a repayment of preference share capital 119.65 crores, because preference share capital was higher. Now preference share capital is repaid out of reserve only, because free reserve to be transferred after repayment of preference share capital into capital redemption reserve account. If free reserve is less than preference share capital paid up, which is going to be redeemed, then we cannot make repayment. Now the preference share capital area dividend, which was also paid along with the preference share nominal value, we can say This area dividend is not the repayment of capital. Hence, CRR, capital redemption reserve, is not required to be made for payment of area dividend, because all the preference shares were cumulative as per accounting data as it is coming out. Now, preference share area dividend had to be paid for all those losses here, that is becoming or inadequate profit. It is we can say it was remain unpaid for last 13-14 years. So company had made arrangement to make repayment, and now evaluation reserve was for last 3 years, that is for 2016, 31st March 2017, 2018 was 000, and net worth has continuously increased. Secured loan, it fell ultimately to minimum in 2016, but again rose to 120.59 crore in 2017 because of repayment of preference share capital. Now, how it is first you raise loan, bank debit, secured loan credit, then make repayment to preference shareholder. So preference share capital debit, preference shareholder account credit by 119.65 crores, that is their nominal value represented, that is to be repaid to them, and then you make payment preference shareholder account debit to cash or to bank. Obviously to bank, that means you are making payment by arrangement of loan. So once the company making repayment, obviously not by issue of further shares, so it is irrelevant to speak about increase in the paid up capital. Now the secured loan again has considerably increased to 120.35 crores as on 31st March 2018. That is why we can say there was further interest expenditure because of secured loan continued, and but we can look into the fact there was no unsecured loan on 31st March 2016, 2017, 2018. That means company confident enough to make all repayment of loan. So that is why they made arrangement of secured loan, not the unsecured loan. And unsecured loan generally raised for working capital. Secured loan is capital, little bit capital in nature. Company making repayment of capital, the management with the secured loan. Now total debt for the 31st 3 2016, 31st 3 2017 and to 31st 3 2018 was remain same as the secured loan, because unsecured loan was nil. Now all the year company had the investment into all subsidiary, that is 31st 3 2016 117.69 crore, 31st 3 2017 117.69 crores, and it has increased a little bit in sorry, 31st 3 2018 117.91 crores. Now cash equivalent also, cash bank and cash equivalent also increased 3.63 crores from 31st 3 2016 to 6.75 in 2017, 5.70 and 31st 3 2018. Now inventory also, if you go more depth study, little bit in-depth study, then on 31st March 2016 total inventory was 40.8 2 crores. On 31st March 2017, it rose to 62.50 crores, and still there is an increase 73.94 crores in 31st 2018. Now inventory has increased from 2014 2000 to 15, then to 16, 17, 18. 2014 it was 32.91 crores, 2015 35.36 crores, 30%. 2016 it was 40.82 crores, 31st 2017 62.50 crores. Inventory stood on 31st 2018 73.94 crores. And if we go little bit more in-depth study, let us examine the working capital. Working capital in 2008, last 10 years, say, it was negative of 220.82 crores, 2009 negative of 24.87 crore, 2010 negative of 21.70 crore, then it was 2011 12 negative of 32.54 crore, and negative of 28.40 crore respectively. In the year 2013, working capital was negative of 27.81 crores. 2014 it improved little bit and it was 17.31 crores, and 2015 company had positive working capital, it was 15.60 crores. Then it is continuously improving in 2016 37.54 crore, 31st 2017 sorry 2016 31st 2016 it was 37.54 crore. It little bit fell to on 31st 3 2017 35.95 crores. Again it went double and more than double, that is 31st 3 2018 72.89 crores. So there is a continuous from negative working capital last 4 years, that is 2014 the company had last negative working capital, and in 15 16 17 working capital from 16 it doubled plus, then little bit marginal decrease, then again double from 35 plus or very close to 35.95 crores to 72.89 crores, more than 100% increase. Now we have to wait a little bit to get the working capital figure on 31st 3 2019. That will be a magic figure. If it is improved more like 100 150, it double again by next next 4 quarter, then we can see the magic will play in the share price, because working capital means excess of total of all current asset over the all current liabilities. So if there is a less working capital, then the company is suffering from the short term liquidity. If the company had more working capital, more and more improvement working capital, so company has easiness in dealing in the business. They can make all the payment like salary, arrear interest from time to time. They can make repayment to short-term creditors as well as long-term creditor. So company has a view to improve the balance sheet, had a view to clean up the balance sheet. Now the balance sheet is clean, there is no preferentials, don't get doubted. Reserve had increased to on 31st March 2018 116.50 crore excluding revaluation reserve, but obviously there is a capital redemption reserve and so net worth has increased to 250.56 crore. Now there is no unsecured loan for any years, last 3 4 years. There is only secured loan, unsecured loan, which drastically came from 800 plus crore to 42.74 crores in the year 31st 3 2016, but has again increased to 120.59 crores because of repayment of all preference share in cash along with the arrear interest. And again, the secured loan has little bit increase due to the making arrangement or say arrangement of money or say working capital. In truth, the working capital has doubled, but there is no increase in the secured loan. That means company had a very good cash business. Without loan, increased figure of loan, there is a working capital doubled. Now if you check the inventory, which is continuously improving. Last year, that is 31st 3 2018, total inventory or the stock was 73.94 crores. Inventory increase indicating that there is a production, there is a sale, there is a waiting to be dispatch goods to the say retail vendor or say debtor. So company has improved, lot of improvement, and there is no question to look back. Now there is a many doubt regarding NCLT for say company in the year 2000. I'll speak only a little more, 2 3 line, because already much time elapsed in explanation of all this. 2 line. Initially in 2009, the company has had allotted rupees to nominal value paid up capital share to all FD holder at a price of 11.55. Now there was all FD holder they it might be already had sold out when in 2015, when company share blasted it to 14 rupees, sorry, 41 rupees 80 paisa near, from the figure of 11 rupees. Started running in September, and on 5th or 6th November 2016, the company had a share price of 41 rupees 80 paisa. It might be some of the FD holder they have already sold. Now the share was issued under the order from the Chandigarh NCLT. Now there was again an appeal by the mm, by the some of the investor, or as a rule, some investor had a contradiction, and they made an appeal. Okay, the shares which were issued to the FD holders at 11 rupees 55 paisa in the year 2009, and there is a and NCLT Chandigarh favored the company, and said those FD holders still continuing shares in their demat account, or they are continuous to holding, they are companies to make repayment their all FD dues including arrear interest in cash, and cancel those shares. And those shareholders who have already sold out, for them nothing to be done, because share had been sold out. Shareholder may not be traceable, and there's a lot of problem, may not be they are financially sound now, so that cannot be done by the court. Now some of the shareholder, they were holding shares still. From 11.55 it went up to 44 rupees, and their total investment already had fourth time return, and then again it came down, but still it is doubled from that time. So they are willing to hold the share long, or they are long term shareholder. So they made an appeal to the NCLT, central NCLT, and central NCLT has cancelled the order of the Chandigarh NCLT. So nothing is there. Promoter stake will continue to at that 30 between the 35 to 36%, which was continuing after 2009, that is after issue of further equity share in settlement of the debt. So there is no questions of further raise of debt. There is no FD deposit with the company, but there is a secured loan from all banker, other institution, which is continuously decreasing from quarter to quarter, and there is no preference share, there is no obligation even for payment of interest, preference dividend from last 2 years, because it has already been paid, and it is clear from the balance sheet on 2017, that is 31st 3 2017. Please take your own decision, read the financial data, so you will understand how much improvement company had made. It is a very clean balance sheet. It will be after some time, there is no preference share, there is no loan. If however the company reduce paid up capital by repayment of capital rupee 1, so its capital will fall to 50% paid up capital, and if there is a buybacks after some time, so company improve this way, that may be happen, and it might be the company issue little bit bonus shares, because to make the all the long term shareholder happy. Let's see what Mr. Suri and their family will do. They had a very good performance from last 10-15 years, and last 3 to 4 years, 5 years, emerging performance. I accumulated most of the share when company's working capital uh, was reducing, negative, that is was coming into negative to positive. I made my mind and understood the company is a turnaround story, and when in the 2014 from negative into 2015, company had positive working capital 15.6 8 crores, then I understood it is clearly a turnaround story, and then the company share capital, share value prices rose most from below 10 in 2015 up to 41.8 rupees in 2016. Thank you very much. This is all from the Ratan Gangapadda. I have not telling anything regarding atorvastatin, Montelukast, Belgium drill, or say desterolin, or say health home, or say OTP improvement or medical equipment, more sale, increase sale, or Morepen INC in US, they had also double in the turnover. All these I am leaving apart, because I most of the time analyze the company in the financial data, and apart from this, others are obviously uh, is a supporting document. So fundamentally, very good company. This is, you make your own choice. Take the suggestions of some financial expert, an equity expert, and then make investment of your own money. Risk is your. Don't depend upon my comment. I'm just giving an outline or say profile of the company, and Obviously, I'm fully invested. Even I'm increasing whenever there is a fall. I buy Morepen with the profit of other companies. Thank you very much. Good night.